Hello students, my name is Bilal BS. Today we are going to study AS4. Events occurring after the balance sheet date. So this is a small accounting standard. As for examination point of view is not very important, but IC may ask any questions. First of all, we have to see in this we will study, does the event provide additional information materially affecting the determination of amounts relating to conditions existing at the balance sheet date? Does it provide additional information? I hope you know basics in studied in IPCC. I will go to directly to the point. You know, right? Once again, this is the balance sheet date, approval of financial statement, any events occurred in this, whether it affects financial statement. It can be adjusting event, it can be non-adjusting event. If the additional information gives materially affecting the determination of amounts in relating to the conditions of the conditions existing at the balance sheet date, then it it is a adjusting event. So if the information additional information materially affects additional information materially affects in determining the amounts relating to conditions existing at the balance sheet date, then it will be adjusting event. You know what is adjusting event? Adjusting event is a you have to modify the balance sheet. You have to go back and modify, change the event that affects the financial statement. It will be other than what you prepared on 31st March because of events occurred after balance sheet date. Only when materially affects and the additional information gives material effect in the determination of amounts relating to the condition existing at the balance sheet date. So then it will be known as adjusting event. So adjustment is required to the figures of the assets and liabilities at balance sheet date. Okay, we'll say it does not materially affect and it is not uh, relating to the condition existing at the balance sheet date also. To condition existing at the balance sheet date also, then still there is a, this is the two condition required for adjusting event. Still there is a possibility of adjusting event. Can you guess what is that? Yes, correct. If the going concern is indicating that C is, if the going concern effect is possible, there is a event indicate that the entity has ceased to be going concern, then it will be considered as adjusting event. Okay, one more point is, these are the two conditions required for adjusting event. Even when there is a going concern effect, these 2 points not required. One more point, these two condition is not required. Exception is the statutory requirement of law. When there is a law requirement is there, it can be considered as adjusting event, otherwise non-adjusting event. What do you mean by non-adjusting event? No changes in the figures at the balance sheet date. Even sometimes it can be material, but condition is not met at the existing date. But when non-adjusting event is material, then disclosure in board of directors report is necessary. Disclosure in board of directors report is necessary. We'll understand AS4 by some questions which are asked in the examination. The first example, XYZ Limited written off its debts rupees 11.5 lakhs, treating the same as a bad and doubtful during the year for the 31st March 2019. This bad debts, this debt is considered not recovered at all for the last 5 years. For the last 5 years, this debt is not recovered at all. Now they are going to prepare the balance sheet. So during the course of preparation of balance sheet, they recovered the entire amount. That is, after this date, they are preparing this date balance sheet. Now they received the entire amount. So IC asked what treatment should be given on 31st 2019 balance sheet, in the balance sheet. So answer will be, it is a adjusting event, because the recovery of debt of PQ Limited, that company, of rupees 11.5 lakhs is an event which provides further evidence of the condition that existed on the balance sheet date. So that company should reverse the entire amount, showing the debts as recoverable form. So it should be considered as a adjusting event, because it fulfilled the two conditions. It provided further evidence, additional information that determines the condition existing at the existing balance sheet date. That's why It is adjusting event. Second question. Uh, in one of the plant of XYZ Limited, there was a fire on 10 May 2019, in which entire plant was damaged and the loss of rupees here fire loss of rupees 40 lakhs estimated. The claim with the insurance company has been filed and a recovery of 27 lakh insurance. Recovery of 27 lakh is expected. The financial statement for the year ending 31st March 2019 were presented on 30th August 2019. So IC asked, how should it be shown? What is the effect in the balance sheet date? How it is shown? So for this answer is, if the going concern assumption is no longer valid, the going concern assumption is no longer valid, then all the preparation should be showing the assets and liability at NRV, that net realizable value, assets and liability. In case if the going concern assumption is valid, even after the fire, no adjustment is required. Because it does not fulfill two conditions. So no adjustment required in the financial statement. However, this explanation in the material, right? This is a material, so disclosure required in the board of directors report. These things are plant damaged, right? Fire. So these are not a condition existing at the balance sheet date. That's why it is a not non adjusting event. So if the going concern is no longer is there, then on the basis of NRV, preparation of assets and liability, if the going concern is valid, then no need of adjustment required. If it is a material, that's why disclosure in board of directors report is necessary. Next question. Major fire has damaged the assets in a factory. Okay, assets in factory damaged. A major fire occurred of a assets of in a factory of a limited company on 5th April. Five days after the end of and closure of the accounts. The loss is estimated at rupees 10 crores, 10 CR, out of which 7 CR recoverable recoverable from insurance. So how the loss should be treated in the financial final accounts for the previous year? This is question asked by the ICA in the examination. For this, answer is the loss due to breakout of fire is an example of event occurring the after balance sheet date, because year ending is 31st March 2019 occurred after the balance sheet date, before approval of the final accounts. But the question is whether two conditions satisfied for calling adjusting event. No, two condition is not satisfied. The condition relating to the does not the this event does not relate to the condition existing at the balance sheet date. It has not affected the financial position as on the date of balance sheet, correct, and therefore require no specific adjustment in the financial statements. However, this is a material non-adjusting event, so disclosure in board of directors report is necessary. Okay, next question. A company filed a legal suit against the debtor of 15 lakh, okay, is recoverable from the debtor. Company filed a legal suit. Debtor is saying is not paying. Company filed a legal suit on 31st March 2019. So as per legal opinion for the company, chances of recovery of the legal suit is not good. Possibility is not there to recover the amount. That came to know on April 2019, next month. Can the company provide full amount 15 lakhs as provision? Full amount as a provision is a adjusting event. Yes, of course it is a adjusting event. Conditions are there as per AS4. Assets and liabilities should be adjusted for events occurring after the balance sheet date that provide additional evidence to assess the estimation of amounts relating to the conditions existing at the balance sheet date. So in this case, company should make the provision for the doubtful debts. As a legal suit has been filed on 31st March and the chances of recovery from the suit are not good, so it is an adjusting event. Two conditions of is satisfied, so it will be the adjusting event, and the figures at the balance sheet date should be changed. That is, provision of 15 lakh rupees should be given at the final accounts. So this is all about the AS4. Thank you.